Results on the whole have been okay from the US, but the bar was set extremely low, as it always is. Mike Van Dulken, Accendo Markets. We have the BOJ and the Federal Reserve meetings this week, with most expecting no move from the Fed and possibly further stimulus from the BOJ. What are you anticipating?
Yeah, I'm wondering whether the Bank of Japan might actually hold pat. I know there's quite some belief that it may overshadow the Fed. The Fed, as you said, quite rightly expected to hold pat for now, and maybe even in June as well. But the Bank of Japan hinting quite strongly last week that it might add some additional measures like more trading in the exchange traded funds, maybe cutting rates further into negative territory, maybe even offering similar to what the ECB did, loans which would be essentially free money, negative rates, which helped bank shares last week. But I do wonder whether so much hinting last week might have been kind of engineering some hope, but that the actual deliverance of such measures might be held off until a little bit further down the line. It's not really helped sentiment to start the week in Asia or in Europe. So I just wonder whether we might see both major central banks hold off, even though the expectations have been quite high. I mean, it did. Those hints last week did help to get the yen off its recent highs, but it's still got a way to go before it undoes its strength and what has been a significant hindrance since early April.
We have first quarter GDP for the US, Eurozone and the UK. Are you expecting any strong data there?
Well, the UK is, I think the Brexit situation, we're almost exactly 2 months now until the vote. We're starting to see evidence of that holding things back. Anecdotally, one of the examples is that the traditional season of people moving around in the city just isn't really happening this year because financial firms, we just don't know what the outcome is going to be. The arguing from both sides of both camps rather, is strong. But we just don't know. It's potentially taking the UK into uncharted territory. There is no precedent to go on. The results of an exit are just, for me, unquantifiable, and why you'd want to do this in the midst of an economic recovery just seems crazy. So I think that's seeing many companies, not just financials, holding off for the moment. So that could well impact growth, and the expectations for UK GDP this month have slowed back on a quarterly basis, but maybe just holding up on the annual. So holding up an annual rate of perhaps 2.1%. But for the quarterly figure to have fallen back from about 0.6% to 0.4%, which is about right. So not disastrous, but it's unlikely to be too inspiring. I think we've had some weak retail sales figures recently, which hints that the consumer is holding off from maybe spending, and I think just the whole move into this run up to the Brexit is seeing people hold off. In the US, I think the energy situation is still seen weighing on growth there. I think we're expecting a much weaker figure. Consensus looking for growth to have dropped back from 1.4% in Q4 back down to 0.8 on a quarter-on-quarter basis. So again, not too inspiring there. Not disastrous, but I think the spike up we saw in Q4 is going to come back. But if you look back, it may well be that there is some knock-on from indices having hit their highs. Corporate outlooks are still troubled in terms of results season. Results have been, on the whole, okay from the US, but the bar was set extremely low, as it always is, so it's very easy for them to beat expectations, but the outlook is always key. And in Europe, I think still same thing, weighed down by just struggling growth and getting through getting through reforms and getting the engine going again. And there, I think the growth, kind of stagnant around 1.5% on a year-on-year basis.
And what other events or data releases should investors keep a close eye on this week, and why?
Other major data for the week, I was looking through right to the back end of the week. Actually, next weekend we've got some China manufacturing PMI data on Sunday, which often we see into the end of a week preceding a weekend of China data. We can often see risk sentiment take come off the boil, if you like, into a Friday as we wait to see what the outcome is from that key economy, China. And they're looking for the manufacturing PMI of manufacturing still holding around 50%, but very close to the break-even, so that could quite easily drop into contraction. But the services sector, much more buoyant, which is in line with the company transitioning from an export-led to a more consumer and service-focused economy.
Mike, thank you very much for your comments. Well, that is all from me, Louise Macaulay, for the moment. It's goodbye.